All right, everybody. Here we go. June the 2nd of 2026. And I think we still have all the evidence that we need. Geopolitics, everything that's going on, the stock market is doing well, interest rates are climbing, and I think that's going to continue to be the case. Yes, they go up, then a little down, then up, then a little down, then up, then a little down. The 30 years breached the 5% mark and it's come back, but it's going to get above 5%. Mortgage rates are going to continue to remain high, and here's why. And this is going to get a little data wonky, and I hope you don't mind. The primary investors in mortgage-backed securities are life insurers who have these long-dated liabilities that come to them, payout of death. They have to match asset and liability duration, not necessarily maturity. There is a difference. Since the average homeowner is now tending to stay in a home for 11 years, historically that's been about 7.5. That is pushing the duration of the mortgage-backed securities out from what the life insurers would typically have thought. So if the yield spread at a 7.5-year duration is 150 basis points, I'm just picking a number out of thin air, but the yield spread at 11 years is 235 basis points, then the historical spread over the 10 years is not going to be the same. So don't expect mortgage rates to come down. And an interesting stat came out not too long ago. More people now have mortgages above 6% than at 3% or below. So that's a big change. All right, let's get to the hot sheets and what you want to know. So here we go with the numbers for the close of May. Here we are on June 2nd. A little late for the hot sheets, but that's okay. We sold, and by we I mean all the real estate professionals on 30A, 99 homes in the month of May, and I was calling it how long in advance? 6 weeks in advance? Was I telling you this would happen? I'm certain I was. Versus 55 last year, that's an 80% increase in unit volume of homes sold. That tells you everything you need to know. Now, for the month of June, I've been saying 66 is what we did last year. I wasn't quite sure where we were going to go. It didn't look super good, didn't look super bad. It looked kind of about middle of the road. But I'm here to tell you, as I told you while I was in Orlando, 66 may not be as easy to do as it looks like, but we're probably going to get in the 70s. Well, we're already at 72, and it's on the 2nd of June, and I can tell you right now, I got 3 homes in me that aren't on the books just yet, and I feel like we might be in business on those. So we're at 72 to close in June versus 66 last year on the 2nd of June. I imagine then we're getting to 80 plus. Volume is still strong, proving momentum. All right, now let's talk about July. Hey, here we are, a good bit from July. It's not the 15th of June yet where I'd begin to think, well, that's going to be kind of the volume indicator. We have right now 6 homes are pending right now for July. Now, last year there were 62, and if I was a betting person right now, I'd say we're going to do more than 62 because despite all the fear and concern or ideas that people have, the volume is strong, and strong volume is causing inventory to fall and absorption rates to get lower and to balance out the market even more and more. But with 6 on the books on the 2nd of June, that's not as strong as I'd like to see at this moment. But we'll continue to check that weekly. And let's get one more stat. Right here. As I told you a couple of weeks ago, and as I told you again last week, the inventory is falling and unit volume is steady and high. And I think I did say if we sold about 99 units, you can go back and check, for the month of May, we'd be at about a 6.4 or 5, or maybe 6, I said. I'm not sure, but we ended up at a 6.83 months of absorption. That's a fair and balanced market. Great homes are not going to look at lowball offers. Bad homes are not going to sell if they're mispriced in the slightest. If you've got a bad home, let's just say it. If you've got a bad home that would otherwise be worth $1,000 a square foot if it was a good home, and you're trying to get $1,000 a square foot for it, but it needs $250 a square foot to get to $1,000, you got to be at $750 a square foot or less. And that's just reality, and that's where this market is. Reality based. But homes are selling. If you're real, buyers are real. If you've got a good home, buyers have to step up. If you've got a bad home, sellers got to step up. If you've got a reasonable home in a reasonable market, in reasonable condition, let the games begin. This is a good market. That's the hot sheets for June 2nd, 2026. Thank you.